Good morning everyone and welcome to Morning Markets here at True Potential. So yesterday was another volatile day for asset classes globally. We really are seeing the clear market impact now of the escalating conflict within Ukraine, particularly on global equity prices and commodities. As you can see in the ticker, UK and European equity prices were hit particularly hard yesterday, showing acute weakness through the day. But there was strength in Asia, particularly in emerging market equities and in Japan. Now, we can understand why European asset prices have been hit particularly hard. Europe faces particularly difficult economic consequences from the conflict in Ukraine. And we're also seeing huge volatility in European energy prices. European gas prices have doubled in the last 2 weeks. So this poses particularly acute economic headwinds for the region as we move out of the winter and into the spring. Asia remains insulated because it doesn't face the geopolitical consequences that Europe does. It's relatively neutral so far. Also, it doesn't face the same inflation pressures that Europe has and that are likely to exacerbate into the spring. And also the central banks and the governments there have some room to do further stimulus should the economic situation globally deteriorate. So there is a diversification. We are seeing continued weakness in global equity prices led by Europe. And this is likely to create further inflation pressures for households into the spring, given the rise in gas prices, the rise in oil prices, and a continued squeeze on real incomes. And that poses a particular problem for policymakers as we head into the March month of important central bank meetings. If you recall our earlier conversations, we had discussed that most central banks were expected, particularly in the US and in the UK, were expected to raise interest rates again this month. The US was expected to do its first interest rate this month. However, they're likely to be doing that on the back of a slightly deteriorating economic outlook. So messaging will be very important from those banks. Guidance will be very important for markets. Market interest rates have fallen over the last 2 weeks. They are expecting less interest rate hikes over this year. They're expecting slightly dovish communication from the central banks to acknowledge the geopolitical conflict in Europe and the likely consequences on household incomes. And it's important through all of this to stress that this is a time for patience and diversification within global portfolios. So we've seen the weakness in global equity prices, but unlike January, we've actually seen bond yields across yield curves fall. So that is, fixed income has generated positive gains over the last week or two. Yields have fallen fairly uniformly. So we've seen gains across the yield curve. So whereas global equity prices have been weak, fixed income allocations within globally diversified portfolios have helped offset those losses and created pockets of positive returns, and also being allocated to commodity buckets has helped as well. And commodities, not just energy, such as oil, but also in asset classes which offer protection in these periods of drawdowns, such as gold. So it's important, I think, to pause in these volatile times and look to maintain diversification within global portfolios, and to not rush into any decisions. Now, that's all for today. We look forward to speaking with you tomorrow when we'll give you a further update on the situation in Ukraine and how it's affecting market prices. Thank you.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.